Hey, badass business owners. Today I want to talk about something that I think is very, very critical for you guys to keep in mind, especially right now, because many of you are getting your year-end numbers from your bookkeeping accountant or somebody who is finalizing your 2021 numbers. Now, once again, this is very valuable for you no matter when you are listening to this, even if it's in the middle of the year. And it is something that I see happen all the time. And what it's causing you is to work more and more hours, but not necessarily making more and more money. But it's a false illusion as if you are making more money. And you're probably going, Tammy, what the heck are you talking about? Well, that's what I want to dive into today. I want to tell you how I want you to work smarter, not harder. I know that a lot of you keep thinking that, hey, I did fantastic this year. I did better than I did last year, and I can't wait to see what I do the next year. And a lot of times you're referring to sales. So for example, let's just say that 2 years ago, you did 175,000 sales, and last year you did $350,000 in sales. And you're like, oh my God, I kicked ass. I did so good. I can't wait because next year I'm going to do 400,000. I'm going to do $500,000 in sales. I'm going to do this. Now, whatever your numbers are, you can plug those in. But here's where I want to tell you to slow down, turbo, because for many of you, you're chasing sales instead of chasing profits. I want to take a moment and use an example to help you slow your roll a little bit and start asking the right questions before you go hog wild in trying to get as many sales as you possibly can. Now, please know, I am not trying to get you to not drive your sales and create even more sales. I want you to do that, but I want you to do that in a healthy way that leads to a healthy bottom line for your business, but also healthy for you as well. Because many of you last year, to drive those amazing sales that you did, you worked 65, 70 hours a week. And if you think about it, in order for you to continue to double your sales or grow your sales, for many of you, you're left with one of two options: is to continue to work those crazy hours, work more crazy hours, or hire people. Now, all of those come at a cost. Obviously, you working more and more hours comes at a cost to your own personal health. And let's face it, you're probably not paying yourself properly in the first place. So you're really taking a pay cut by working all those additional hours because you're on like a set thing that you do for your pay. And if you go out and hire somebody, even if it's at $25,000 for the year or $30,000 for the year, that comes off your bottom line profits. And for many of you, you heard me talk about ROI on a regular basis. What do you even need to do in sales to offset that 30,000? Now, I'm going to use some numbers in my example today as I walk you through what typically happens and why you want to be careful about it. But I promise you're not going to have to do some heavy math. I know math and me throwing numbers on a podcast is never easy, but I think I've got it broken down that will be easy to understand as you listen to the podcast. And I'll probably be inspired to create a YouTube video on this at some point as well. But let's talk about this for a minute. Let's just say that you are a business owner and you have been in business for several years now. So you have been able to grow your sales and you've been able to, by basically understanding your numbers or accidentally, you've been able to create a decent profit. You have been smart enough to learn that you need to take money out as an employee, but you also know that the goal is to have the business make money. That is something we preach here all of the time. You get paid as an employee in your business, and then you have money that the company makes, the business makes, and that is where you also get paid your owner's wages. Now remember, your business's profits go to three things: retained earnings to stay in the business to grow it, your taxes, and owners draw money for yourself. So even when I say company profit, that's not necessarily all yours. It just depends upon how you tend to spend that money. Now let's say a couple years ago, you did $175,000. Fantastic. And out of that $175,000, you were able to create a 15% bottom line. Still not bad. Now we're going to come back to that number. So the next year, last year, you have done a great job growing the business. You've gotten word out. You've been out networking. You've done some advertising. Word of mouth has kicked in. The business has done really well. And you've gone from $175,000 in sales up to $350,000 in sales. Yes, you have doubled your business. Great job. And now, because you've seen the success of what you've done, you have told yourself that the next stop is going to be $500,000. Yep, $500,000 is the goal next year. Now let's talk about this for a minute. So last year 175, this year 350, and the goal is to get to $1 million the next year. I've already told you you're working 65 to 70 hours a week. Now, the only way that you can get to that $500,000, because you've thought about this, is you're going to have to hire another person. You already have somebody on your team, and now you're going to go out and you're going to hire someone else. So you know you're going to spend about $25,000 just in payroll to bring this other person on. But because you're going to have to run a separate crew, you also probably need a truck. But you're not going to go out and just buy some $40,000 truck or van. No, you said, hey, I have found a great deal and I'm going to be able to pick this one up for $15,000. Now, if you think about it, to hire that person and to get that truck or vehicle, you're looking at a total of $40,000 straight off your bottom line for these two things. No matter what your sales end up being, this is $40,000 you're investing in the business to bring on another person and to bring on this truck. Also, keep that in mind as we move our way through. Now, let's break down those numbers a little bit so that we can understand. And I think when I break down these numbers, it's going to be able to help you understand what I'm talking about, because a lot of times people chase sales. So the goal, like we said, is going to be $500,000. We're chasing sales. But I want to encourage you to make sure that you are chasing profits. It's not just a sales game, people. It is about making profit. It's about the business being profitable. It's about you being profitable and earning a great wage for what it is that you do. This is not a race to see who can do the most sales. This is about creating a business that pays for itself and gives you a wonderful living. And if you have employees, it creates a job where they make a great living as well. Now let's take a look at these numbers. And that first year, 2 years ago, you did $175,000. And because I told you that you were really good and you started paying yourself as an employee, you took a salary of $40,000 that year. So good job on that. The profit of the business after costs, after expenses, left the business with 15%. So the bottom line was 15%, which means that the business made $26,000. Now, for our example, we're just going to roll that in with what you made, just to make it fun. So you had $40,000 that you made as an employee and the business made $26,000. So overall, you could have netted $66,000, assuming you didn't put anything back into the business. And obviously from that $66,000, you're going to have to pay your taxes. Now, last year, because you did really well, remember, you doubled your business. You went up to $350,000. Now, you worked just as many hours, probably a little bit more if you're being honest with yourself, but you did hire another person, so it didn't seem as overwhelming as it probably could have been. Now, you paid that other person $25,000, so your costs went up because you have this new employee. You still paid yourself the same $40,000. Even though you were having a great year, you're like, hey, I'm not going to change anything. I'm going to make the same $40,000, and I've got this $25,000 employee on top of that. But when you got to the end of the day, you looked at your bottom line, and last year, you recall you made $26,000. Well, this year you made $42,000. So the good news is your profits went up. You're like, success. But when you look at the percentages, which oftentimes is not on there, the percentage though was only 12%. So yes, the dollars went up from $26,000 to $42,000, but the percentage of how much you kept went down. Now, logically, a lot of times people will go, oh, that's because I hired this other person. I get it. But remember, you doubled your sales, right? You did 100% more in sales, but your profits did not double. Your profits only went up 62%, just a little over half. If you think about it this way, for every dollar you made at the $175,000, you kept 15 cents. But when you did your $350,000 year, for every dollar you made, you kept 12 cents. So there's a big difference there. Now, it may not seem like a lot when you're comparing 12 cents to 15 cents, but when you start multiplying that by the thousands of dollars in which you do in sales, that number becomes very big. And what you want to do is you want to take that profit and loss and you need to dive into it to understand, where did the money go? Why did that change? Because profits are a percentage game. For every percentage you gain, when you start multiplying it by those thousands of dollars, it can mean a lot of money. And I'm going to show you that here in just a second. Now, remember I said that you wanted to go for that $500,000 in the coming year. Well, you were going to spend $25,000 on an employee and another $15,000 on that truck, which was going to be $40,000. And remember I told you that was going to be $40,000 off the top in profits alone. And by the way, if you ever want to know what your return is, I just did a video on it talking about return on investment to show you how to do this, but I'm going to do a quick and dirty way of doing this. Basically, if your bottom line is 12%, which we know that it was this current year, you would take the $40,000 that you plan to spend and divide it by the percentage of what your profit typically runs. So if we take that $40,000 and we divide it by that 12%, what our bottom line typically runs, it turns out that in order to just break even, to just get our money back, your first $333,000 in sales are going to pay for that. Okay, yes, you have to be able to create $333,000 just to break even on that person and that vehicle in year one. Now, you might say the vehicle is going to last for several years, so I don't need to do it all at once. Well, you may not have to do it all at once because you paid for it. It's going to come right off the very first sales that you do because you've already dedicated that money to it. Or you're wiping out last year because remember the business made $42,000 and you're spending it already. Now, I know it gets confusing at this point, so just hang with me. Like I said, I don't need you to memorize numbers. I need you to understand the concept of what I'm trying to explain. When we compare both years, our costs obviously went up because if our profits went from 15% down to 12%, that means something else has had to go up. Now, the expenses, dollars, when you compare the two, a lot of times they'll go up. It's not a huge dollar amount in most cases unless you went out and you bought something really big. So in which case, when you look at percentages, you might find that your percentage stayed the same or it went down slightly because some of your expenses are called flat expenses, meaning they never change. So your insurance, just because you did more sales, may not have gone up. Other costs like gas, mileage, stuff like that, things that are based off of dollars, that might have gone up on those percentages. So some are variable, they tend to go up and down, and some are more flat or consistent, and they just stay the same. So their percentage tends to go down. So no matter how much you do in sales, the dollar part doesn't change, but the percentage will. That's a totally different topic when we talk about expenses. But in the example that we're using today, yes, the dollars for expenses probably went up, but the percentage probably stayed the same or went down. Where the biggest change is going to happen year over year for this particular business that has gone from 15% down to 12% is going to be in costs. And that's expected because, like I said, we hired an employee. So that automatically is going to shoot up the costs. But you're also probably going to find that the other materials and labor costs and everything else probably went up as well, especially in a year like last year where most costs have gone up. And in this particular case, what we're probably going to find is that their cost of goods went from 60% and probably jumped to 63, 65%, and their expenses probably stayed about the same or slightly went down. Now, I know that's a lot of numbers, but before I move on, I want to kind of pause for a second. One, I do want to pat this business owner on the back. They went from $175,000 to $350,000. That is amazing. And yes, their profits even did grow, even though they did hire somebody, which is a good thing because in order for us to grow, we do have to hire people. And they were able to still make a profit. So they didn't give up all of their profit. And that to go from 175 to 350, they were able to continue to have a decent growth in their profits. So I'm not taking away from the business owner that had this happen. So they did go from $42,000 to the $60,000. They did a great job growing their profits. But the point that I'm trying to get across is before we go shooting for $500,000, it's time to pause. I don't want you to not make $500,000 your goal. All I'm saying is, does it have to be next year? You just doubled your business and you probably did that by the seat of your pants, running around like crazy, trying to make things work. All I'm saying is pause for a minute and look at the business and ask yourself, what do I need to tweak, to change, to create more profits so that as I continue to grow on my journey to $500,000, I don't throw all of that away. You need to dive in. You need to look at your processes. How can you tweak them? Look at your waste. How could you have saved money? Dive into each line item on that profit and loss and ask yourself, how can you create more money? How can I get better pricing on the things that I buy? Can I get my materials for cheaper? Yes, the prices went up. Do I just shrug my shoulders and say it is what it is? Or do I go out and say, hey, I can buy smarter, or I could buy differently than what I did? How can I continue to tweak those expenses down so that every dollar I save goes to the bottom line? If you're going to have to hire people in order to grow, do you have a plan for that? How are you going to hire them? How are you going to go find good people? Do you have an employee handbook? Do you have a training plan? We can't just keep hiring people and then wondering why they keep leaving us, or why they seem clueless, or why they can't hit the ground running. As you grow your business, people are a necessary evil, so you need to have a plan. So by taking a pause year where you continue to do what you've been doing, but you tweak your business, you're better prepared for the next year. Now let's look at the tale of two different businesses. Business one takes the pause and they dive in and they really tweak things and they make things better. Now their sales went from 350 to 400. So still really good. They grew the business still an additional $50,000. But because they focused on it, they were able to get that profit line from 12% back up to 15%, which means that their profit at the 12% would have been $48,000, but because they were able to tweak it and get it back up to 15%, they were able to create a profit of $60,000. That's $12,000 more. And if you think about it, that's 25% more profit than they would have made had they not done anything different. So that's an amazing difference from taking a pause in that business. The second business owner decided to just go balls to the walls and create $500,000. That was the goal. So they did $500,000, but they didn't tweak anything. And now they created, let's just say nothing else changed. Let's just say best case, they stayed at the 12%. The odds are they didn't. Odds are they probably went down to 10. But let's just say they were able to maintain the same 12% profit that they had the year before. 12% of $500,000 is the same $60,000. So business owner A did $400,000 in sales with $60,000 profit, and business owner B did $500,000 for the same $60,000. So here are two businesses with a difference of $100,000 in sales, one at 400, one at 500, both making the exact same amount of profit. So see, you don't have to chase sales to make more money. You want to be more like A, because now when they go to that next level, guess what's going to happen? Business owner B, because if they don't put these processes in place, guess what? They started bleeding more money. This is why I don't believe they would have stayed at the 12, because they weren't training people the right way. They spent that money on the truck additionally. More than likely, that business that did $500,000 didn't do the 12. They probably did 10. And they probably chased different rabbits. They probably each had different problems that they went through in their business. One was more proactive, diving in, looking for opportunities. And now they're really ready to take the business up to that $500,000 the following year because they put better processes in place. Where that person who did the $500,000 is probably like stressed out, struggling, trying to find the right people, trying to keep things on. Their mental health is in a different place. Yes, the business made the same amount of money, but one had to do it a much more chaotic kind of way to be able to keep it together. And how much longer can they keep it together? Listen, you're going to run your business any way that you want to do it. I'm just telling you to use the staircase method. Let the business take off, pause for a sec, and then take off. It doesn't even have to be an entire year. It could be that you just say, hey, for the next 6 months, I'm going to dive into my costs, into my expenses, and I'm going to work on my processes and developing a plan for my people and my hiring and everything else that I'm going to do. That's all I'm saying. And then run again. Folks, you can't continue to work more and more hours. You have to work smarter in your business. This is why I really want you to know your business numbers, and this is why I really want you to know those percentages. Those percentages tell you a heck of a lot. I was looking at a profit and loss just the other day with a business owner, and they had an amazing year. Their last 3 years has been continued growth on top of continued growth. And when you look at their profits, it looks good. It is growing right along with it. But the minute we slapped on those percentages, that number was getting smaller and smaller and smaller. And that business owner was thinking, gosh, you know what? I can't keep working these crazy hours. I need to figure out a way that I can bring on more people, or I can do this. And at the end of the day, all they need to do is make a few little adjustments, a few little tweaks, and they're going to be able to not only grow their sales, but more importantly, they're going to see their profits grow at a much faster rate than what they have been seeing them grow at. All I'm telling you, pause for a minute. Get excited. I want you to pat yourself on the back. I want you to high five your entire team or yourself in the mirror. I don't care. for the great growth that you have as far as where your sales have gone and where your profits are gone. All I'm saying is think like a business owner. Pause for a minute. This is not a sales game. This is a profits game. It is about making more money in the business for you to continue to grow. The sales number is a vanity number. Who doesn't want to say that they have a $500,000 business? We all do. But at the end of the day, I'll take a $200,000 business making $50,000 versus a $500,000 business making $50,000. One you have to work way much harder in. Now, I'm not saying both aren't working hard, absolutely, but one is working smarter versus harder, and that's what I want you to do, okay? I want you to dive into those numbers. I want you to learn those numbers, and I want you to have a plan. So please do not chase sales, chase profits. It may mean that you go in and you dive in and you look at your pricing, and guess what? You may still get to the $500,000 just by fixing your pricing. You didn't have to work more sales. You didn't have to hire more people. All you had to do was fix your pricing, and guess what? You were able to increase those sales just by fixing the pricing. That's all I'm saying. Pause for a minute, look at everything, dive in, work on those numbers. You'll get your profits up and then go chase more sales. There's a timing for everything. I'm starting to rattle. I think you get the point. I love these. Hopefully the numbers didn't scare any of you off and you got the main point of what I was trying to explain here. And get out there, make some more sales. Congratulations for those of you that are kicking some butt and making things happen. And for those of you that kind of struggled last year, maybe this will resonate a little bit what may have happened. And I don't want you to give up, okay? You guys are doing great. It's just about being smarter and becoming and thinking like a CEO and not just somebody who happens to do whatever it is that you do. You are a business owner. And the more you think like a business owner and dive into things as a business owner, I promise you, you are going to do much better in your business. With that, I am done and I am out of here and I will talk to you on the next episode. Bye for now. Hey, badass business owner, before you go, as you know, I'm a huge believer in you knowing your business numbers. After all, it isn't about how much you sell, it's about what you keep. And the best way to grow your profits is to start diving in and understanding those business numbers. To help you on this journey, I have created the Know Your Business Numbers course. We will walk through how to read your profit and loss statement. You'll learn the key calculations that'll help ensure that you're making a healthy profit on all of your products or services, plus a ton of other good stuff that'll help you learn how to use those business numbers to create even more sales and profits. Just check out the link below in the show notes or visit knowyourbusinessnumberscourse.com. So if you're ready to increase those profits, it's time you start diving into your business numbers.